Myself, Dr. Gowrishankar from the Department of Professional Accounting and Finance. And today we will be discussing on the topic of GST. Have you ever wondered how GST work across different states in India? Why do we have CGST, SGST and IGST? And how does input tax credit flow seamlessly across the country? In this video, we will understand the complete structure framework of GST in India, simple and clear way. Introduction to GST structure. India follows a federal system where both central government and state governments have taxation powers. Because of the structure, India adapted to a dual model GST model similar to countries like Canada and Brazil. Under this model, both central government and state government levy the GST simultaneously, and this ensures a revenue sharing, cooperative federalism and uniform taxation across the country. Components of GST. Let's now understand the four major components of GST. First, CGST, that is central GST. CGST is levied on the intrastate supply of goods and service. It is administered by the central government and the state government under the CGST Act. SGST, state GST. The SGST is also levied on intrastate supplies but is collected by respective states under the Union Territory with the legislator under SGST Act. UTGST, Union Territory GST Act. This applies to the intrastate supplies in Union Territories without legislature, such as Lakshadweep and Andaman. It is administered by the central government under the UTGST Act. IGST, Integrated GST. IGST is levied on interstate supply of goods and services and imports. It is collected by the central government and later shared between center and state as per the law. Seamless flow of input tax credit. One of the biggest advantages of GST is seamless flow of input tax credit, also called ITC. This eliminates the cascading tax, that is tax on tax effect. Intrastate transaction. For intrastate supply of CGST credit can be adjusted only CGST liability, and SGST can be adjusted only on SGST liability. Cross utilization between CGST and SGST is not allowed. Interstate transaction. In interstate supply, the seller charges IGST. This IGST can be paid using available of ITC of CGST and SGST in prescribed order. The buyer in the destination state can claim the IGST as said as input tax credit. Under ITC utilization, as per the law, specifies a clear order for the utilization of input tax credit. IGST credit first is used for IGST liability and then for CGST liability and then for SGST. CGST credit, after exhaustion of IGST credit, CGST credit can be used for CGST liability and then for IGST liability. SGST or UTGST credit, after exhaustion of IGST credit, SGST or UTGST credit can be used for SGST or UTGST liability and then for IGST liability, but only after CGST credit is fully utilized. Compensation cess. To protect the state revenue after GST implementation, the government introduced GST compensation cess. It is levied on the luxurious and demerit goods such as tobacco, pan masala and motor cars. Initially planned for 5 years till June 22, the levy has now been extended till March 31st, 2026. Taxation on specific goods and services. Although GST is a comprehensive, certain items receive a special treatment. That is, the first thing is alcohol for human consumption. It is completely outside of GST. State continues to levy state excise duty and VAT. Petroleum products, product like petroleum, diesel, crude oil, natural gas and ATF are temporarily kept outside GST. They are taxed under central excise duty and VAT. GST will apply in future based on the GST Council recommendation. Tobacco products. The tobacco is taxed under GST along with an additional central excise. Real estate sector, sale and purchase of immovable property is kept outside ambit of GST. Tax subsumed under GST. GST replaces a multiple indirect tax to create a unified tax structure. Central taxes subsum. These include central excise duty, service duty, additional excise duties, CVD, special CVD, central sales tax and related surcharges and cesses. State tax subsumed. These include VAT, sales tax, luxury tax, entry tax, purchase tax, entertainment tax, except local body taxes, advertisement tax and tax on lottery, betting and gambling. Tax which are not subsumed under GST. Some important tax are still outside GST. This includes basic custom duties, state excise duties on alcohol, stamp duties, electricity duty and entertainment tax levied by the local bodies. Thank you.